I'll try to be brief and hopefully not bore you, and hopefully also share with you what we have learned as not just an investor or a holding corporation or a conglomerate, but also as a company that has grown in the emerging market, that has founded in the emerging market, and it has emerged. And with the crisis, during the crisis, we got better and we have built our company. So let's talk about innovation a little bit. Innovation is the best innovative ideas can come from anywhere today. It's not just a forte of America, a forte of China or India or Brazil. It's driven by the end users and market demands. I mean, to give you an example, Africa is becoming the testing ground for new and innovative mobile banking. This is mostly driven by the consumer demand. And this experiment in the mobile banking which is happening in Africa today could bring about fundamental changes, could revolutionize the traditional banking, where if you were poor, you were excluded, will be a model that will simply not work. Now, consumer-led innovation is what attracts private entrepreneurs and thus has a high degree of success, as it allows corporates, entrepreneurs to fill in a gap, existing gap. Companies as well as governments across the world have realized that innovation and technological advances are key to their long-term growth. But while corporates are driven by profits, obviously, governments have a different mandate. And governments have an important role to play, which is creating a platform that allows real value-add innovation. What I mean real value-add innovation, with all due respect to all my friends in Facebook, that I don't believe is a real value-add innovation. It does add a lot of value, but in a monetary sense, I don't believe there is a lot of value-add. What government needs to do is provide a supporting framework that encourages innovation, research, and development, and that could be in the form of tax break over medium to long term. This is very important, encourage state or privately held companies to acquire R&D companies overseas to fast-track innovation, because burning cash on duplicating efforts that are already being worked on competitive markets is not a worthwhile investment and won't provide return on investment. Promoters and innovation, promoters should realize that technology is a risky business, but it could change. I mean, the whole risk profile of your business can change overnight with a single eureka moment. Technologies that we thought won't work 10 years ago, it is working today. So you just don't know. The world is not constant. The world is moving. The world is changing. And so is the technology. Technology is what's driving our life today. 10 years ago, Twitter was impossible. 10 years ago, 20 years ago, Internet, 25 years ago, Internet was impossible. But these things are changing the way we live. Now, one thing the government can also do, especially in places like China, is open the market to competition to attract overseas R&D companies to come and set up bases here and support them with some funding. And as my colleague Bruno here was talking about the availability of capital here for new innovation, this is already here. Now, for R&D companies, Asia growth story, especially of China and India, is extremely compelling. And linking to this demand is going to be key going forward for R&D companies. We all talk about China and India, and it has become a story that gets reported on a regular basis, and there are all kinds of theories and projections about these two economies. Now, I want to stick to the private equity because this is a private equity topic here. What we find when we go and talk to an entrepreneur or an innovator a new idea is they have a wrong idea about valuing their own company. They would go and talk to an investment banker or whoever, and they will come up with a valuation which means Mars to us. Now, if somebody's going to commit a seed capital, if somebody, especially a private entrepreneur or private investor, they have to get a good valuation. So entry valuation is going to be very, very, very important. Now, we talk about commit capital allocation. What happens is everybody jumps on the bandwagon. If they say China is a growth story, everybody's jumping to China growth story. If India is a growth story, everybody's jumping to an Indian growth story. If people know there is a BPO business or KPO business in India, everybody has to have that investment strategy. They don't know if that strategy is, the entry is premium or there is a bargain, there is a thing to do. So if you get too much capital allocation, what happens is the quality of deal is not limitless. The good quality deals are limited. So if you find good opportunity, you have to work on it, you have to structure it, and you have to create it, you have to make it worth your while. That's why if you see, if there is a, going forward, some of my friends have said that there will be a lot of competition between China and India. Capital commitment we don't know which way the capital commitment will go. But there is an interesting thing that I believe is underreported, which is the bilateral trade between these two economies, which is going over 5 times the world average growth at an annual growth rate of 120%. So I don't believe there will be competition. I believe the economic interest will take the center stage and drive the interest. So there is what we are focusing more now is not on a single strategy where we are looking at companies that have true growth factor, that are linking to true growth factor. So there are already companies that will provide you a lot more juice. What I mean by that is a lot more return because they are linked to true economies, they're linked to true strategies. So why we are going for that is very simple. Because we've seen quality of deals. I mean, a lot of people may disagree with this, but we can only talk from our experience. The quality of deals where everybody says Brazil is hot, so let's go to Brazil. China is hot, so let's go to China. Money has no nationality. I believe that money has absolutely no nationality. Our job as an entrepreneur, as a business, is to add value, to create value, and to create returns for our shareholders. So we are always busy trying to find a strategy that we believe is underreported, that is not getting a lot of attention, and we believe this strategy where a technology company or a high-tech company is linking the two economies. Now there you will see that there's not a lot of capital being committed. And this is where you can have collaboration, not competition with a native private equity firm and a foreign capital firm. Collaborate and support a company and grow the company. Now what I've seen also is the temptation of technology companies to just list. If you go to India, if you go to India, there's so many listed companies, unbelievable amount of listed companies. If you look at the real business, I have no idea what type of business these guys do, but the same thing is happening everywhere. The same thing I believe is happening in China or in Brazil. So, we have to cherry pick because there are so much of companies, there are so much of people who believe they have something that they can sell to you. And we were discussing yesterday where people talk about, basically what they believe that capital is unlimited, where somebody is going to go and say, well, this is a growth story, I have to commit capital. I don't believe any reasonable investor who is investing his own capital is going to jump in the bandwagon and say, okay, because I like the story, I like the macro, so I will commit capital. So at the end of the day, valuation is very, very critical here. And by valuation means not fantasia valuation where you're valuing your company 20 times EBITDA, 2050 revenue projection, not that. today's entry valuation, the promoter. We look at the promoter. We look at the way the people are, the way they operate, the way they think. It's very, very, very critical. I thought it's important for us to share this because we go around and meet technology companies, whether it's China, whether it's Korea, especially in the renewable technology now. And I believe Asia will drive renewable technology. And there is so much of, 10 years ago somebody was to say, solar, I would say not interested. 30 years ago somebody was to say wind, I would say not interested. But look at, a lot of people said wind is impossible, but look what wind is doing today, right? 10 years ago when we were committing capital in solar business, a lot of our friends, a lot of our shareholders, a lot of our investors told us, you guys are crazy, you're going to lose all your capital, right? Now we have, we see what's happening in solar. You can install 5, 10, 20, 50 megawatt solar power plant. The cost of manufacturing solar panels, the cost of raw materials is getting cheaper. And the most important part is the innovation is right here in Asia. The innovation is not coming from Europe. The innovation is not coming from US. And the way things will go is because of the physical situation the developed economies are. Innovation will be driven, especially in the renewable. Because, why I'm saying that? Because necessity is the mother of invention. And this is where we are. In Asia, we will choke to growth. Same applies to China and India. China and India can grow, but what's the point of that growth when you will choke your future generation? So renewable technology is a necessity, and the governments realize it. Governments around Asia realize it. And this is what will drive the policy, because the governments will have to support the renewable technology. And that's why I said government will have to work and create the platform and support the demand. And will have to do some hand-holding. And this is where a lot of capital, I believe, going forward will be committed by private equity firms, by entrepreneurs. So it is important for us to understand that I don't believe there is any bubble in the private equity space. It depends on what your strategy is and where you are investing. If you're investing in a strategy which is oversold, an oversold story, obviously there is a bubble. But if you're investing in a strategy that is a necessity, there is an opportunity for you to, first of all, understand the sector and understand the business and then commit capital. So that's why I believe that going forward, Asia, especially driven by China and India, will create a lot of opportunities for high-tech companies to grow, and you'll see a lot of commitment, cross-border commitment, where you will see this is already happening, where you're seeing Chinese companies committing capital in a technology company in parts of Asia, be it Korea, be it China, be it India, be it Malaysia, and you're seeing other Asian companies committing capital. So I believe that's the way forward, and I will end my speech there. Thank you.